Imagine finding a stock that isn't just riding a temporary wave, but is so fundamental to our future that its growth is practically built into the next decade of technology. In this video, I'll show you 2 top growth stocks to buy that could double your money. The first is a silent giant in the world of data, the memory and storage backbone powering everything from the AI revolution to the device you're watching this on. The second is the undisputed king of manufacturing the most advanced computer chips on the planet. It's a company so essential that the world's biggest tech titans, and even entire countries, depend on its expertise. These are industry-defining leaders with deep competitive moats, poised for sustained long-term compounding. They are the picks and shovels of the digital gold rush, and their journey is just getting started. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Alright, let's get right into our first pick, Micron Technology, ticker symbol MU. Now when you hear about the AI revolution, your mind probably jumps to companies like Nvidia, or maybe even software giants like Microsoft, but what's often overlooked is the foundational technology that makes all of that possible. AI models, data centers, and even the next generation of smartphones and PCs require an absolutely massive amount of high-speed memory and storage, and that, right there, is Micron's kingdom. They are one of only 3 major players in the world that produce DRAM, the memory that acts as a computer's short-term brain. Micron is not just a participant, it's a critical innovator in this space. They manufacture the essential hardware, DRAM and NAND flash storage, that allows data to be accessed and processed at lightning speeds. Think about it, every single AI query, every cloud-based application, every piece of data stored in a massive server farm relies on the products Micron makes. As the world generates more data than ever before, and as AI applications become more complex, the demand for their technology isn't just growing, it's exploding. This isn't a trend, it's a fundamental shift in how our world operates, and Micron is at the very center of it. What gives Micron such a powerful competitive advantage is the incredibly high barrier to entry in the memory market. You can't just decide to start a memory fabrication plant in your garage. It costs tens of billions of dollars and requires immense technological expertise to build and operate these facilities, known as fabs. This creates a natural oligopoly where Micron, alongside Samsung and SK Hynix, controls the vast majority of the market. This structure gives them significant pricing power, especially during periods of high demand, which is exactly what we're entering now with the AI boom. Furthermore, Micron is a leader in developing next-generation memory technology. They are at the forefront of producing high-bandwidth memory, or HBM, which is specifically designed for AI accelerators. This isn't just an incremental improvement, it's a quantum leap in performance that AI GPUs from companies like Nvidia absolutely need to function at their peak. By being one of the key suppliers of HBM, Micron has positioned itself as an essential partner to the biggest names in artificial intelligence, ensuring its relevance and profitability for years to come. They are directly supplying the engines of the future. The memory industry has historically been cyclical, with periods of boom and bust. However, many analysts, myself included, believe that the insatiable demand from AI, data centers, and autonomous vehicles is creating a supercycle that will lead to a more sustained period of growth and profitability. We're moving from a market driven by consumer electronics cycles to one driven by the constant structural expansion of the digital universe. The demand from these new sectors is less cyclical and far more predictable, providing a stable and growing baseline for Micron's business. Financially, the company is on the cusp of a major turnaround. After a downturn in the memory market, prices are now recovering sharply, driven by the surge in AI-related demand. This means Micron is set to see a significant expansion in its revenue and, more importantly, its profit margins. As prices for their DRAM and NAND products increase, that extra revenue flows almost directly to the bottom line. We are at the very beginning of this upswing, and catching the stock now is like buying into a recovery story, just as it's hitting its stride. Micron Technology is valued by the market at roughly $439 billion, and it currently trades at a price-to-earnings ratio of about 37.12. Earnings per share come in at approximately 10.51, reflecting a recovery phase after a difficult down cycle. In 2024, Micron generated about $25.11 billion in revenue and posted net income of roughly $778 million. While profitability remains relatively thin compared to revenue, the numbers highlight how quickly earnings can inflect when memory pricing turns, which is why Micron is often viewed as a leveraged play on the next upcycle in data centers, AI workloads, and advanced computing. Looking ahead, the potential for growth is immense. The the stock is still trading at a valuation that doesn't fully price in the long-term structural demand from AI. As the market begins to recognize that Micron isn't just a cyclical commodity producer, but a key enabler of the most important technological shift of our generation, there's a strong case for significant multiple expansion. When you combine that with skyrocketing earnings, you have a potent recipe for a stock that could realistically double from its current levels as it cements its role as a cornerstone of the modern digital economy. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Link is in the description. Now for our second company, which I would argue is quite possibly the single most important company on the entire planet, Taiwan Semiconductor Manufacturing Company, ticker symbol TSM. If Micron provides the memory, TSM builds the brain. TSM is the world's largest and most advanced dedicated semiconductor foundry. What this means is that they don't design their own chips. They manufacture chips for everyone else, and when I say everyone, I mean everyone. Their client list includes Apple, Nvidia, AMD, Qualcomm, literally a who's who of the tech industry. Think about the iPhone in your pocket, the Nvidia GPU powering AI data centers, or the processor in a modern car. There's an extremely high probability that the most complex and important chip inside was manufactured by TSM. They have a technological lead that is years, if not a decade, ahead of their closest competitors like Samsung and Intel. When a company like Apple needs millions of the most advanced, powerful, and efficient chips for its next iPhone, they have only one real option: TSM. This creates an unbelievably sticky customer base and a competitive moat that is almost impossible to breach. The capital and expertise required to compete at the cutting edge of semiconductor manufacturing are staggering. TSM spends tens of billions of dollars every single year on research and development, and on building new fabrication plants to stay ahead. They have mastered the incredibly complex process of extreme ultraviolet lithography, or EUV, which is necessary to create the smallest and most powerful transistors on today's chips. Their scale is so massive, they produce over 10,000 different products for hundreds of customers, that they benefit from economies of scale that no other competitor can match, allowing them to produce chips more efficiently and cost-effectively. This technological dominance translates directly into pricing power and massive profitability. Because TSM is the only foundry capable of producing the most advanced 3nm and soon 2nm chips at scale, they can command premium prices for their services. Their customers are more than willing to pay because access to TSM's technology is the key to their own product's success. An iPhone is only as good as the A-series chip inside it, and an AI server is only as powerful as the Nvidia GPU it runs, both of which depend on TSM's manufacturing prowess. This isn't a choice for them. It's a necessity. The growth story for TSM is directly tied to every major tech trend for the foreseeable future. The AI boom, it runs on chips made by TSM. The transition to 5G and 6G, it requires advanced modems and processors made by TSM. The Internet of Things, autonomous vehicles, high-performance computing, every single one of these multi-trillion-dollar markets depends on a continuous supply of more powerful and efficient semiconductors. TSM is the sole gatekeeper to this future, making it the ultimate picks and shovels play on all of technology. From a financial perspective, TSM is a cash flow machine. The company generates enormous profits and consistently returns capital to shareholders through a growing dividend. Despite its dominance, the stock often trades at a very reasonable valuation, sometimes even at a discount to slower-growing tech companies, due to perceived geopolitical risks associated with its location in Taiwan. While this risk is real and should be considered, the world's deep reliance on TSM also serves as a powerful deterrent, as a disruption to its operations would cripple the global economy. With a market capitalization of around $1.71 trillion, TSMC operates at a scale and strategic importance that very few companies on the planet can match. The stock trades at a price-to-earnings ratio of approximately 31.52, with earnings per share of about 10.50. In 2024, TSMC delivered revenue of roughly 2.89 trillion new Taiwan dollars and generated net income of about 1.15 trillion new Taiwan dollars. Those figures underline the company's extraordinary profitability and its dominance in producing the most advanced chips for the world's largest technology firms. Looking at the path to doubling your money, it comes from a simple formula. First, continued earnings growth driven by the unrelenting demand for high-end chips. As AI models become more complex, they'll require even more advanced processors, driving revenue and profits higher. Second, a potential re-rating of the stock's valuation. As investors increasingly see TSM not just as a manufacturer, but as the central nervous system of the global tech ecosystem, its price-to-earnings multiple could expand significantly, reflecting its true strategic importance. This combination of earnings growth and multiple expansion presents a clear and compelling case for the stock to double over the next few years. So, there you have it, two absolute titans of the technology industry that are fundamental to our future. With Micron Technology, you're investing in the memory and storage that fuels the data-hungry world of AI. It's a company at the start of a massive earnings upswing, positioned perfectly to capitalize on a structural shift in demand. With Taiwan Semiconductor, you're owning a piece of the most strategically important manufacturing asset on the planet, the company that builds the brains behind virtually every piece of advanced technology. Their moat is arguably one of the widest in the entire market. Both of these companies offer a compelling blend of growth, industry leadership, and durable competitive advantages. They aren't just riding a trend, they are the trend. Investing in them is a bet on the continuation of technological progress itself. While no investment is without risk, the foundational roles these two companies play in the global economy provide a level of long-term security that is hard to find in the growth stock landscape. The potential for them to compound your capital and potentially double over the coming years is, in my view, exceptionally strong. Which of these two businesses do you believe has the stronger long-term advantage, and why? Let me know in the comments below. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.